Type one company's name into a search bar and watch how the internet finishes the sentence. Shadow government, the firm that secretly owns the world, the company that owns everything. That company is BlackRock. Last time, we followed the inflation number, and we promised to follow the money one step further, to the single company that quietly ended up sitting inside almost everything you own. So here it is, the calm, sourced version, and it is stranger than the conspiracy. BlackRock is real, and it is enormous. $14 trillion enormous. Its power is genuine, and we will take it completely seriously. But that phrase, shadow government, gets the single most important fact exactly backwards. BlackRock does not own that $14 trillion. It manages it, for you and for 100 million other ordinary savers. Manage is not own. Hold on to that one distinction, and this whole machine finally makes sense. By the end, you will understand what BlackRock can actually do, and what it cannot, better than almost anyone who types its name in fear.
Start with the number, because the number is the whole reason the fear exists. As of the end of 2025, BlackRock managed about $14 trillion, a record, and more than any other financial firm on Earth. That is larger than the entire yearly economic output of every country in the world except the United States and China. So you can see the instinct. Look at that, and it feels like this company must own a piece of everything. But here is the distinction the whole story turns on. Managed is not owned. That $14 trillion is not BlackRock's money. It cannot spend it, move it, or keep it. The money belongs to other people, to pension funds, to insurers, to sovereign wealth funds, and above all, to tens of millions of ordinary people saving for retirement through their 401ks and index funds. BlackRock is hired to manage it on their behalf. The saver owns the asset, BlackRock manages it. Roughly 2/3 of that entire pile is retirement money. So when a headline says BlackRock owns 7% of Apple, what it really means is that BlackRock's funds hold those shares for their investors, for people like you.
So what is an asset manager really? Think of BlackRock as a professional driver for other people's money. You hand it over, they invest it under a mandate you agreed to, and they are bound by something called fiduciary duty, a legal obligation to act in your financial interest, not their own. They do not even physically hold the shares. Those sit with separate, independent custodian banks in the client's name. BlackRock is the manager, not the vault. And most of that money is not being gambled on hot stock picks. The bulk of it sits in index funds, funds that simply mirror an entire market, like the S&P 500, at rock bottom cost. This is the quiet revolution that built BlackRock. The world stopped wanting to pay high fees to star stock pickers who mostly failed to beat the market, and wanted the cheap index fund instead. Trillions of dollars migrated, and whoever ran the biggest index fund shop would end up holding a slice of every major company on Earth, not by buying them in a boardroom, but by passively holding them for millions of savers. To see how BlackRock got that shop, go back to 1988.
BlackRock started small, and it started in bonds. In 1988, Larry Fink and 7 partners founded it inside the private equity firm Blackstone, which gave them a $5 million credit line and took half the company. Back then, it was a boutique that specialized in understanding risk, in knowing what a complicated bond was really worth. It spun off, was sold to the bank PNC, took the name BlackRock, and went public on October 1st, 1999, at $14 a share. For its first 2 decades, it was successful, but not a giant. The giant was created by a single decision in 2009. In the wreckage of the financial crisis, the British bank Barclays needed cash and put its asset management arm up for sale. BlackRock bought it for about $13.5 billion. Inside that deal sat the prize, iShares, the world's leading brand of exchange-traded funds, the cheap index products savers were pouring into. Overnight, BlackRock's managed assets leapt from roughly $1.3 trillion to more than $3 trillion.
In a single purchase, it became the largest asset manager on the planet, just as the whole world was moving its savings into exactly the products it now dominated. The shadow government story grew out of that boring, decisive fact.
Now we reach the first kind of power genuinely worth worrying about. When an index fund holds shares in a company, those shares usually come with votes on boards, on executive pay, on big decisions. And because index funds now hold so much of the market, those votes have piled up in remarkably few hands. But this is not about BlackRock alone. It is about three firms together: BlackRock, Vanguard, and State Street. The academics call them the Big Three. One widely cited study from 2017 found the Big Three, combined, were the single largest shareholder in 88% of the companies in the S&P 500, and in about 40% of all listed American companies. A follow-up in 2019 estimated that together, they cast around a quarter of the votes at a typical shareholder meeting, and warned it could climb toward 40% within 2 decades. Economists treat that as a serious question. But now hold it up to the light, because 4 things separate it from the conspiracy. First, it is 3 firms, not 1. They do not vote as a bloc, and they often disagree. Second, the votes are cast on behalf of the clients who own the shares, under a published stewardship policy, not with BlackRock's own money. Third, largest shareholder means largest record holder, not owner. And fourth, the big one, index funds are passive. BlackRock generally cannot dump a company's stock to punish it, because the fund is required to hold everything in the index. That power to punish and reward at will, the very thing the myth imagines, is exactly what a passive fund does not have. Real concentration, yes. Secret control, no.
The second kind of power is one most people have never heard of, and it is not money at all. It is software. It is called Aladdin, BlackRock's risk management platform, a vast system that models what a portfolio holds, what it is exposed to, and what could happen to it under stress. Here is what raises eyebrows. Aladdin is not used only by BlackRock. It is rented out to the rest of the industry. More than 1,000 institutions, including rival asset managers, insurers, pension funds, and even some official bodies. A Financial Times investigation in 2020 reported that more than $20 trillion in assets were being watched over on Aladdin, and that counted only about 1/3 of its clients. That is on the order of 1/10 of all the stocks and bonds on Earth seen through one company's lens. It sounds like a control panel for the global economy. But here is the honest limit. Aladdin does not make decisions. It does not buy or sell anything. It is a dashboard. It measures risk and runs what-if scenarios, and the humans at each institution still make their own calls. The real worry economists raise is subtler. If a huge share of the market watches risk through the same eyes, they might all run for the same exit at the same moment. That is a legitimate debate about financial monoculture, not proof that one company secretly steers the markets.
The third kind of power is the one that gives the shadow government phrase its bite. BlackRock keeps getting hired by the government itself. In the 2008 financial crisis, when the Federal Reserve had to rescue the bank Bear Stearns and the insurer AIG, it needed someone to value and manage the toxic, complicated assets left behind. It turned to BlackRock, which ended up managing around $130 billion of those distressed securities on the government's behalf. Then it happened again. In March of 2020, as the pandemic froze the markets, the Federal Reserve launched emergency programs to buy corporate bonds and hired BlackRock to run them. That drew sharp criticism, and deserved it. BlackRock would be buying corporate bond funds, and it sells its own. In theory, it could have been buying its own products with public money behind it. That is a genuine conflict of interest, and people were right to scrutinize it. There was also a revolving door. Senior people move between BlackRock and top economic jobs in Washington, in both directions. But here is the honest frame. Hiring the world's biggest bond expert to manage a bond market rescue is not a secret coup. These were public contracts, disclosed, with conflict rules attached, and the 2020 role was later put out to competitive bidding.
That door runs through every big bank too, a pattern worth watching closely, not proof of a takeover.
So far, we have taken the power seriously. Now, here is the cleanest evidence that BlackRock is not an all-powerful shadow government. It keeps losing public fights, in the open. A few years ago, BlackRock leaned hard into what is called ESG investing, weighing environmental and social factors alongside profit. It triggered a fierce political backlash, and several US states pulled their money out in protest. In 2024, Texas alone pulled $8.5 billion of its school fund out of BlackRock, the largest such move, following Florida, which had pulled $2 billion, and a string of other states. And BlackRock retreated. Larry Fink stopped using the term ESG at all, saying it had been weaponized, and dropped it from his big annual letter. Now, the honest picture. Both halves. Fink said the firm lost about $4 billion to those withdrawals that year, but still took in roughly $400 billion of new long-term money over the same period. The backlash was real, and it stung politically, and it barely dented the total. BlackRock has even started handing votes back to its clients, letting the underlying investors direct how their shares are voted on about half its index fund equity, some $2.5 trillion worth. Powerful? Yes. Untouchable? No. A real shadow government does not get overruled by the treasurer of Texas.
So, put it all on the table. Is BlackRock powerful? Enormously. Should that make us pay attention? Absolutely. But does any of it add up to a shadow government, a secret hand that owns the world and steers it from behind a curtain? No. And now you can see exactly why not. It does not own corporate America. It votes a large, concentrated slice of it as one of three giants on behalf of the clients who actually own the shares. Its Aladdin software does not run the markets. It monitors a huge share of them from the outside. It does not replace the government. It keeps getting hired by the government to clean up crises, in public and under contract. Each of those is a real reason to watch closely. Concentration, conflict of interest, and financial monoculture are serious questions economists and regulators genuinely debate. But each one is checked by the fiduciary duty BlackRock owes its clients, by the passive rules its funds are locked into, by the client's freedom to pull their money out, and by hard competition from rivals like Vanguard and State Street. The power is real. The conspiracy is not. And that reframes the whole question. The thing worth asking was never who secretly owns the world. It is calmer and far more important. What happens to a market when this much of everyone's savings flows through so very few hands?
So the next time you see that phrase, shadow government, the company that owns everything, you will not have to choose between blind fear and blind trust. You will know its real shape. BlackRock is the world's largest manager of other people's money, mostly retirement savings, and that scale alone buys real structural power. Concentrated votes, a piece of software beneath much of the market, and a phone that rings when the government hits a crisis. That power is worth understanding and worth watching, but it is managed money, not owned money, and it is fenced in by duty, by rules, by competition, and by the simple fact that clients can walk away. Manage is not own. Hold on to that, and the fear turns into understanding. One necessary note, the same as always. This is an explanation of how a company and a market work. Not financial advice, not a view on any stock, and not a claim that anyone is running a secret plot. Next time, we follow the money into the machinery of financial sanctions. How one country turned its own currency into the most powerful weapon on earth, and who really controls the switch. This has been Money and Power Explained. Follow the money. It always leads to power.